Hey guys, what's up and welcome to a new Tesla update video. So today, let's go over Tesla, let's go over the market, and let's figure out what happened today because my goodness, Tesla is up a phenomenal amount today. So as usual, if you enjoyed, don't forget to hit that like button. And again, this is not financial advice and I am not a financial advisor. And of course, my membership section on YouTube is live. The link is below, $2.99 a month for my intraday thoughts on Tesla and updates as the stock and the chart is moving. And everyone today is seemingly really happy for obvious reasons in my members section. But with that being said, let's jump into it and let's discuss what has happened and what we can expect moving forward. The market closing in just about 7 minutes or so, but I don't think it'll be too much different from here. You never know, actually, it could. But it looks like Tesla will be closing at about $272, which will be up almost 10% on the day, which I think goes without saying is a substantial outperformance compared to the market itself, which is phenomenal to see. Now, of course, this is on the backbone of the news that came out last night, if you're not aware, which was this right here that I shared with my members as well. But essentially, Morgan Stanley, Adam Jonas, he raised his price target by 60% to $400 per share from $250. Now, the reason this matters and the reason Tesla's up so much, mostly, in my opinion, off of this, is because Adam Jonas, if you don't know on Wall Street, he's one of the people that Wall Street seems to respect the most, right? Whose opinion they respect the most. So when he says something like this, and when he raises the price target by 60%, which is a pretty substantial raise, right? And obviously switches it to overweight from equal weight, and names that their top pick. That's a lot, right? That's a lot of positive news essentially, right? That's gonna be a lot of heads turning in Wall Street essentially, and people going like, oh wait a minute, hold on a second, that's pretty damn good. Now, so that's most likely the reason for the majority of this move today. But let's talk about it from a technical analysis perspective, and let's figure out is there more room to run? Is this the top? Do we go sideways? Like what happens next, right? So first and foremost, I think the most obvious thing to look at, which, we can also just, sometimes I like to do is go through my post that I talked about here, is going to be options flow. Let's talk about options flow because the day is about to end. So let's see how are options looking. So this is, by the way, what it looked like when I posted it in the morning, 5 hours ago. You can see pretty much all green. Now taking a look at it, you can see substantially more red coming through, right? Compared this in the morning to now end of day, right? A lot more redness coming in, a lot less green. And if there are any green, they're very small bubbles, if you will, which all that means is that the premium, I guess the confidence almost, if that makes sense, is not as high as it was, for instance, back here with these massive green bubbles, right? So that's number one. Number two, you can see the big bubbles are, in fact, they're a red one. Like, for instance, this one's here. It's almost $3 million, $300 puts, $3 million in premium pretty much, which is a lot for pretty much the end of November, which is a substantial amount. So take that for what it's worth, right? People are starting to get a little bit bearish on Tesla at these levels, which, you can't say it's too surprising after pretty much a 10% run, right? I have personally sold about 20% of my shares. The other 80% of it are pretty much in sold calls. I definitely think there's more room to run, but let's talk about that next, right? So that's the options flow. We got that out of the way. Now, the next thing to talk about, it's nice to sometimes just go through this, and I can't remember what I was talking about. Is the level that we talked about for quite some time. Now, the most important thing in my opinion is going to be this, right? So if we go ahead and let's say remove this for now, right? So, by the way, we did break out of this yellow line right here, which is great to see, right? Good stuff, which we'll actually keep for now. Obviously above the 21 EMA, finally broke above the 50-day moving average, which is great to see as well, right? This congestion period has finally picked a direction clearly up, which is obviously really good to see. Let's remove the 21 EMA for now. And then what we're going to do is we're going to bring out the classic Fibonacci, right? So we're going to go from here all the way to down here. And we're going to go something like this, right? This is a level I've been talking about for a while, the 618 level between 266 to as high as 270, right? I've been talking about that level for a long time. You guys know that. And I talked about how, to me, it's a very important level. And the main reason is because, to me, breaking above this level, and now we did. And now what I want to see is for the next 2 days, roughly, so tomorrow and Wednesday, I want to see the strength maintained. I don't want to see Tesla just collapse, right? This can just be, in theory, a false breakout above this very important level in my eyes, right? So I don't want to see that. What I want to see is strength. I want to see Tesla hold above at least 266, 267, minimum above that. And show some strength and show some confidence. If I see that, then this will validate this move a lot more, because right now, it could still just be one of those momentum swings and then just collapses tomorrow. It's still very, very possible. So that's number one. We broke above the level, which to me signifies that the downtrend from earnings most likely is complete, but I do want to see a little bit more confirmation before we take this, for what it's worth. Because again, sometimes you have these anomalies of these, like, one, sometimes even 2-day candles where it just does something that's kind of like a massive trap, whether it's a bear or a bull trap, and then it just does the complete opposite the following day after that. So you want to be a little bit cautious when you get these kind of moves, and you really want to see some confidence. So that's what I'll be looking at for the next, day or two. I want to see confidence, and I don't want to see Tesla just pretty much give up these gains right away, right? That will be pretty bearish. But if it does maintain and show that confidence and shows that strength above these crucial levels I just talked about, that is really good, and that will solidify this move, telling me that the, again, downtrend from earnings is, very likely complete. Now, what does that mean though, right? Let's just say that does happen. Let's say the downtrend has shown that it is most likely done. Great. What does that really mean though, right? Well, to me, what that means is the fact that we still will have red days. We're still going to have corrections. We're still going to have all of those things, right? We're still going to draw downs. We still have, essentially just red days, like painful days. Like that's absolutely still going to happen. It doesn't mean that we just moon here from here to all-time highs, like pretty much straight. In theory, you could. It doesn't necessarily mean that. What it means is that the red days and any drawdowns we get from here, assuming of course that downtrend seems to be complete, which what I just said with the strength being held over these levels, that to me tells me that any drawdowns, any corrections, any of that, any retracements are much more buyable in my opinion, right? They're much more buyable and they seem to be a lot stronger and, not as scary to enter in my opinion, right? So that's what it means to me. It means that the trend to the downside should be in theory over. So that's number one, right? And number two, again, keep in mind, it's not going to just be an absolute skyrocket from here. You're still going to have sideways action. You're still going to have, some issues like that. It's just an overall positive trend change for the bulls at least. Now, that's going to be a pretty important factor that I really like. We also have CPI and PPI on Wednesday. That's also really important. Now, this is pretty good to know. I want to go on trading you for this one because I can draw here, which is what I want to do. So before we get into the bullish side, because I just have this here, let's just talk about this really quickly, right? We'll go over the other potential bullish situation here, but another possibility that we have here is this right here, which is a bearish thing, right? This can, in theory, of course, still play out, right? This could just be a very massive double top on the daily, on the weekly, whatever, right? But essentially, from this overall rally, we have a massive rally. Then we stopped around, 285 to 300. This was the overall resistance point here. Came down, and now we, in theory, can go back up and do the exact same thing and get stopped somewhere around, 285 to 300, somewhere in that range. And then if we do, we start getting rejected, technically, this double top pattern is in play. And unfortunately, if this pattern plays out, this would be very, very bearish. It's one of the most textbook patterns. It's a classic, just can't go wrong with it. But because it's such a large double top, potentially, again, just potentially, doesn't mean it is for sure right now, it's just a possibility. That means that, the drawdown from this will be substantial. It will be substantial, and Tesla will most likely come back to around the 150s. This, of course, if of course it plays out, will take time. This is not going to happen over the next week or two. This will most likely take probably another month almost to even figure out if it's even in play. And then assuming it's in play, another honestly, at least probably 3 months for it to play out to the downside, right? It will take time. In my opinion, it'll take a bit of time, but this is something you don't want to ignore. So just keep that in mind. I will go ahead and remove this for now, but that is very crucial to understand that, you can't just be a bull and only look at the bullish side. Whether it's technical analysis, whether it's fundamental analysis, you always need to try to at least get some perspective of the bearish side from fundamental and technical analysis, and that's one of them. However, with that being said, let's go to something a little bit more positive. Let's go on the 4 hour over here, and what we can potentially form is going to be a cup and handle. So we have this overall area that we got, sideways action from the earnings drop, right? So we could, in theory, be forming. Let me try that one more time. A bit of a cup and handle like this, something like that, right? It doesn't have to be like the most perfect looking thing in the entire world, but you get the idea, right? Something like this, right? Nice little cup and handle, which usually happens in a downtrend, which we have been in, like a kind of mid-term-ish, short to medium term downtrend, right? And that's a beautiful formation. And then from there, of course, assuming that's what we're in, we can start developing the potential handle, which of course from here will essentially make us, kind of zigzag like this, which if you want to figure out how low that can go, essentially what you do is you take the Fibonacci retracement, the classic Fibonacci, I love it, right? And again, this is assuming this is the top. Let's say this is where the cup, the top of the cup is right here. We don't go any higher. And then you look at where we can go. And I think as low as 243, but probably closer to 250, honestly, right? Wouldn't shock me whatsoever. And that's exactly where the cup can potentially retrace to. It forms, breaks out, essentially almost like a bull flag as well, right? It will be a bullish formation. right? Because you can also take it like this is pretty much the pole, and then you have the flag forming right here, right? Obviously a possibility, but all in all, that would be the potential cup and handle formation that I will be also eyeballing, which is the bullish aspect. So if this were to happen, there is the potential that this cup and handle just forms to break out into the double top. That is still a possibility. For instance, right, it'll be something like this, let's say, and then we zigzag downwards, right? We create the handle with a bull flag or whatever, we break out, phenomenal, and then we rally up right into that double top situation, and then from there the double top is still active, and then from there we of course get a massive rejection where maybe people least expected, right? Just these things are really important, and right now I'm sure no one's talking about this double top. I haven't seen anyone mention it, but don't be surprised if maybe in a couple of weeks from now people will start talking about, oh man, there's double top right here, watch out guys, there's a double top potential right here. You know where you heard it first. I'm just saying, you know where you heard it first. If, of course, that talk starts to come, which if we continue rallying, it absolutely will. People will start mentioning it. So just keep that in mind. Very important to understand that. But that's the bullish aspect, which can lead into a bearish pattern as well. So you always want to keep all these factors in mind. Now, the MACD looks phenomenal. Not phenomenal. It looks great. It looks good, looks healthy, looks perfectly normal for a bullish run, which is great to see, right? Then, of course, the one thing I don't like, unfortunately, is going to be the RSI. RSI in this very short time frame, if we like zoom into this, just this part right here, looks great. But if we zoom out and we take into consideration this whole move over here, not as great, because you can see we're still making technically lower lows, right? We had a high over here, then we went even higher. We had a lower low, or lower high rather, and now we're of course making our way pretty close to what this level was over here back during this high, and we're even lower than this down here, right? So it's like, you know, it's not the most obvious bearish divergence because we're not actually making higher highs on the charts, so it's not that bad, but the RSI is still showing a bit of signs of potential exhaustion. And same thing in the 65-minute chart, or like the 1 hour, whatever, right? You know, you can see we're not making higher highs, right? In this case, it's a better example where, you know, we had the high over here, and then we went up as high as pretty much almost 79 on the RSI, right? And then we went even higher, and then we started making that small bearish divergence. Cool. That was like a shorter term bearish divergence. But then we, of course, now just recently broke out to even higher levels at 273, which we just closed at. And unfortunately, you can see we are making technically lower highs. Thankfully, it's not substantially lower highs, but nonetheless still a lower highs. So a bit of a bearish divergence setting up on the 65-minute as well. So take some caution in that. Now, if we do retrace, like I said, I do expect that cup and handle, right? The handle of the cup to form. But on top of that, usually, like I said, you want to retest breakouts, right? So because we broke out of this yellow line right here, right? Or if you look at it on the daily, same concept, right? This yellow line right here, wouldn't be completely impossible for us to come back down to retest either this breakout that we had over here, which will bring us back down to about 250, or maybe even just a 50-day moving average, which will put us back down to about 255 roughly, give or take, right? But I wouldn't be surprised if sometime soon-ish, once this momentum fades, we do come down to retest those major levels that have been showing a lot of resistance, right? The 50-day moving average and this yellow line, this trend line that we just broke out of, we're showing major resistance. But now that we finally broke through them, as usual, very classic to come back down to retest it, hopefully successfully. And if we do, that will be the confirmation, in my opinion, that we can go a little bit higher, which unfortunately can potentially still lead us into that double top. But of course, there's still plenty of room to run even from there. So that's kind of the way I'm looking at it right now. So let me know what you guys think down below. But thank you so much for watching. This video is 13 minutes long already. Somehow I don't even understand how, but is what it is. Either way, thanks for watching. See you tomorrow. Peace.